Good morning, trading world. It is August 25th, 2022, 7:57 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the SPY. Bonds down, rates up. That's the way we like to. Sorry, I'm thinking about some old 2 Live crew, but the countdown to the most important binary event this week, and that is the Jackson Hole Symposium. For me, we get a similar replay to last Thursday and Friday. We get a run-up that stalls on today, pull back into Friday, and another possible bull run-up to close out Friday. The important part is where we end up on Friday's close, and if it gives us some type of divergence on a higher time frame, like the daily. Now, 2 days ago, I said we were sitting on the edge of a cliff. Let's take a look at the cliff and where we are risk-wise. We should all understand that the market doesn't like higher rates. Bonds have been on a steady sell-off through August. Let me bring the bond chart up. All right, here's the visual for the bonds. As you can see, since early August, since early August, bonds have been pretty much on a steady downhill move or sell-off, if you will. Now you might ask, what does that have to do with rates? Well, since we have an auction-style bond market, the less interested people are in buying bonds, the higher the interest rate goes to entice people back into buying treasuries or bonds. In short, the more bonds fall, the higher interest rates rise. As we can see, we were down here. We had made it all the way back down to a 2.98% rate on the 10-year. Now we're all the way back right now at 3.1% and change. And this is really important because we're still looking at another Fed rate hike pretty soon. Now, I've explained this before way back about how a majority of tech are habitual borrowers, and how most of these companies' PE ratios are affected by the rate in which they have to repay debt. This is why, as bonds continue to sell off, it will eventually drag tech down with it. With tech down, there are not many sectors with enough market cap that could hold the market up. Realizing all of this, look at where we sit. Let me get us back to the SPY. All right, here we are, 20-day 1 hour, 10-day 30-minute chart on the SPY. And I kind of want to show you where we started off this week. This green line represents the market maker's expected move. The black line represents where we started or where we closed last week. I often talk about risk versus reward, where here's the visual. If the Fed speak goes off the rails and we go over the cliff, things could get ugly. We could see a 2, possible 3 standard deviation move because professional portfolio managers have to dynamically hedge by selling S&P futures into the sell-off if we get below the actual cliff, this green line, the market maker's expected move. Now, if things go as expected and there is some type of rally, we could go up, and that up move would probably take us somewhere around 418, and at the most maybe 422 or so. So the downside risk could be pretty much a bottomless pit if we fall off this cliff. Now, this has nothing to do with being bullish or bearish, because this is a binary event. It's basically 50-50 either way. But it has everything to do with understanding risk and making sure your risk, or you are in a risk defined position if you decide to position yourself before the event. So just to drive home that point again, I want to visually give you a reference. As if you're bullish, your reward is basically here. Versus a risk of going here. So that's the visual of risk versus reward. And again, I'm not picking sides. I'm not saying, bullish or bearish, even though I am pretty bearish right now. Again, this is making sure you understand risk versus reward. And so that if you do go bullish, you need to make sure you're in a defined risk position, that if things go off the rails and we don't get the move you're looking for, you have your losses capped at something you can stand. And the same goes on the bearish side. Yesterday, I took a bullish shot in Nvidia, and even though knowing things were likely more to the downside in Nvidia, just to kind of give you some insight on the logic that I was thinking with Nvidia, because the position I took in Nvidia had less to do with Nvidia, but more to do with the positions that I already had on. Because I was looking at, with the nearly 28 or 30 positions I had open, pretty much all but one were bearish. And so I wanted to have some type of shot to the upside, just in case we did break out and go for. I felt like it would be on the back of Nvidia if we were able to take off further than we were to the upside. So I felt like I would take a bearish risk defined shot in NVIDIA. And that's pretty much what I did. It really had less to do with NVIDIA, but more to do with I was so bearish everywhere else. I just wanted to have some type of bullish shot on just in case we broke out above the 418 level. So this all plays in risk reward. And to be a great trader, you're always thinking in terms of risk versus reward. And to me, that's even more important than bullish versus bearish. With all that being said, let's get to the key levels of the day. Alright, here we are back with the key levels of the day. Starting on the resistance side, we have our Jack resistance 415 to the 416 area. And key today, which is going to be our Queen resistance 417 to the 418 area. And then our King resistance 419 to the 425 area. On the support side, we have our Jack support at 414 to the 413 area. Queen support 412 to the 411 area. And then King support 410 all the way down to the 405 area. 405 represents almost a 2 standard deviation move from where we are now. The main thesis for today is bearish, closing below the 413.67 with a projected target low of between 412 and 406. Our alternate thesis is bullish, closing above the 413.67 with a projected target high of between 416 and 423. The current major channel we're in is 416 all the way down to 397. After more overnight upward momentum, we are very close to capturing all of the leftover imbalances that were above or pretty close to it. Then all that will be left are the more recent imbalances below. This does not look good for the bulls going forward into next week. Let's get into the scenarios of the day. Alright, our first and most probable scenario is going to be our rounded reversal day type structure. We could get a continued push higher at the cash open toward our Jack or Queen resistance area and find midday chop around either the Queen or King resistance area before spending the same energy we use going up to go back down the second half of the day. A key part in identifying the rounded reversal day type structure is going to be divergence, because we should have so much momentum at the open that from the time that we open, maybe 5-10 minutes beyond the opening, we should start to develop a small but ever so slight divergence. So as price action continues to make its way up, you should see your indicator level off or slightly with the just slightest downward angle as price action continues to go up, and that's going to build all the way through lunch. that's going to be your key into identifying the rounded reversal day. And the other thing that's usually accompanies this rounded reversal day is that from the very moment the cash open happens, we're going to be moving up, or we're going to blast up. There's going to be no going back to fill a gap. We're going to have this gap up at the open, but there's going to be no going back to try to fill that gap. So that's our rounded reversal day type structure. And usually there is a vice versa alert on it, although it's a lot lesser today than normal. But the vice versa just says that instead of continuing up at the cash open, we would have a continuation down. And we would find our midday chop around either the possible queen or king, more likely the queen support area. And then the second half of the day, we would go up with the same amount of force that we came down with in the morning. But that's even less of a, it's less of a risk for some reason today, based on where we are and the reports that we have coming. Although that could be a reason to kind of push us back down even further before open this morning. But that's our rounded reversal day type structure. Let's get to the next. All right, our second most probable scenario is going to be our trend day up. And with our trend day up, it starts with a gap up from the previous close represented by the blue line. And we, just after the open, we start with a fade back toward that previous close. We find support on or before that previous close, then begin the uptrend for the morning, better known as our golden window, which is usually the best time to trade. We find our midday chop around either the possible queen or king resistance. And we start the second half of the day usually with a head fake that looks to continue the dominant trend of the morning, but at some point we begin to fade some point in the second half of the day into the close. What'll be interesting today, if we do get a trend day up, is how big this fade begins to be the second half of the day. That is our trend day up day structure. All right, our last scenario is our expansive range day structure. We could look to chop back and forth in a small but expanding range, building up energy for the next move. And it will look something like this, where we go up and you think we have a boundary around the jack support, the jack resistance, come down and find support, and we push that boundary that was established around that jack resistance up even further. And then the next swing down, we push that lower boundary even further as well. So that's our expansive range day, and it's going to happen until we get back down and cross below the previous close. So that's our expansive range day. Those are the structures and the probabilities for today. I hope this helps. again, I cannot stress this enough. I say it in the close of every pre-market, but now is even more prevalent than ever. Your most important job as a trader is to protect the capital that you already have. And we do that by knowing and understanding the risk that we have on in each position and managing that in accordance to our account size. Be very careful over the next 2 days because I do expect things to get pretty violent here soon. As always, wishing you a positive trading day. Have a great one.